My name is Nathan, and I'm Client Services Coordinator for the Carrot Project. The Carrot Project is a nonprofit organization that works to increase the number of profitable and successful farms and food processors in the Hudson Valley and New England. We do direct services, business assistance and financing, and through twin webinars. We also have 10 years of experience to strengthen the sector by helping others do the same. In 2018, we reached over 1,200 agricultural businesses. More about our loan programs, trainings, and business assistance, please visit www.thecarrotproject.org or email businessassistance@thecarrotproject.org. Through our work with CADE and a 2-year research project called Measuring Profitability and Success, financial management skills are crucial for helping farmers meet their goals, which in helps them continue to sustain the environment and their communities through their work. Other resources we've created is the financial management calendar we're going to discuss today. Its purpose: you manage your farm business more effectively by providing guidelines about why you'd want to do certain financial tasks, when to do, what you'll need to do so, and the steps required. This webinar is most useful if you can follow along with a calendar document. So if you have that in front of you now, please look it up on our website, www.thecarrotproject.org. And we'll be discussing them both. Julia Shanks and Dorothy Supit. Julia was with the Carrot Project for many years as a business editor and was part of the research team that first developed this resource. She'll be presenting the calendar tool. Dorothy is our executive director. She'll help answer your questions using the Q&A function and during the Q&A period at the end. Feel free to ask questions at any point using the Q&A function. Here's the financial management calendar tool.
Thank you, Karen. Welcome, everybody. As Kira mentioned, we developed this farm financial calendar tool as a way to help you farmers stay on top of your financial management tasks and understand what you need to do and when. Before we get started, I just want to state that I throw out some numbers in this presentation and give some examples, and these are for illustrative purposes only and do not take my numbers as fact. You will need to do your own research and your own projections to manage your business. So webinar, we're going to talk about why bother with financial management in general. We're going to go over the calendar both in terms of formatting and the concepts, and then we'll review some specific tasks within the calendar so you can get an idea of how it works in practice. And any of my webinars with the Carrot Project or gone to any financial management workshop, you've had it drilled into your head that you need to keep financial records so that you can stay on top of your business. And when you do regular bookkeeping, your financial management is manageable. And with bookkeeping, you can actually make business decisions, have numbers from which you can work with. You can manage your cash flow better, and obviously you can file your taxes more easily when you've been keeping up on your financial management. So this calendar is to help you get the systems in place to track your finances. And so you can stay on top of the day-to-day and, of course, have the data you need to make important business decisions. For those thinking about doing enterprise planning, budgeting, or applying for a loan, you'll need good records, and this calendar will help you figure out what you need to do and when to stay on top of your financial tasks. The tool is two documents. The first document is a checklist of what you do, and the second is a more detailed table of tasks. Within the calendar, there's going to be 2 sets of tasks that you need to do. They're going to be operational or management tasks, and recommendations on how often you should do different things. So here's the first part of the calendar tool. You can calendar tool part 1. And you have tasks listed and when you should do them, whether it's daily, monthly, or quarterly, weekly, or bi-weekly, or annually. And we recommend when to do and how often to do these tasks. Different businesses, you'll have different needs. A smaller business may not need to do some of the weekly tasks as regularly as a bigger business. The larger your business, the more transactions you have and the more frequently you'll need to do things. If your business is running tight on cash, you're probably going to want to do all of these things on the more regular basis. It also tasks by what are managerial tasks and what are operational tasks. And the managerial tasks are the ones that help you make decisions about your business, how you want to grow, how you want to manage your cash flow, if you can afford to make a purchase or not, and how your products. The operational tasks are more of the grunt work, the things that you just need to get done so that you can do all managerial tasks. And if you're going to be outsourcing or delegating some of these tasks, you can really delegate some of the operational tasks, where managerial tasks you really need to be involved in so you can make the decisions about your business. So some of the tasks have a little number next to them. And this is going to tell you if it has more detail to it. So for example, this monitor cash balances is a pretty detailed task, and you can't get enough information just from cash balances. So you'll see a number 1 next to it. And number 1 is going to refer to the more detailed task list that will go into more depth. So the detailed task list, and it's the financial calendar part 2. And down the left side, it has the numbers 1, 2, and these correspond to the numbers on the checklist. It has actual task, the goal of the task, as in why do you want to do this, what you need to get the task done, and the process. For a few examples in a few minutes to see how this works. But are there any questions about the layout of the calendar tool? Questions into the Q&A box, and Kira will help to moderate. Okay, going. Get started with the actual task. You need to get a few things in order to make the most of this financial calendar tool. The thing you need to have is monthly cash flow projections. And we have a template for creating cash flow projections on the project website. You can see the link here. And when you have the projections in place, it's going to help you accomplish all of these tasks. First, you can manage your cash throughout the growing season, and when you have an idea of what you want to spend, it helps you better manage your cash throughout the year because you have a plan laid out. Also, you'll want to have cash flow projections when you're comparing your actual what you projected. The way you want to make adjustments, you can see what you plan for and what you're doing and make adjustments. You have to have a system in place for tracking your revenue and your expenses. If you track of what you're spending, you need to know what you've spent to track it. You need a tracking mechanism. I'm a huge fan of QuickBooks. You can see a tutorial on how to use QuickBooks. If you go to the CARE Project website under Farmer Resources, you'll see a couple of webinars on how to use QuickBooks. Quickly, a bit overwhelming for some of the small farmers, and if you're doing, if you have a smaller business, you may be more comfortable just using Excel, and have an Excel register for farm businesses on my website, which you can use. You can use paper and pencil, or old-fashioned ledger. It's going to be a lot more difficult to do many of these tasks with paper and pencil, and I recommend that at the very least you become familiar with Excel for tracking your business transactions, and if you have the capacity, QuickBooks will be even better. Obviously, you're going to need a calendar to make appointments for yourself on a physical calendar with these calendar tool tasks to make sure they get done. If you have reminders for yourself in your actual calendar, chances of them being done are going to be less. There's always going to be something getting in the way. There's always chores to be done, so it's good to make an appointment to do these things on a regular basis, whether it's 5 p.m. on Tuesday or 6 on Sundays, making sure that you have a regular time set aside to manage your business by the numbers. So getting into some of the more specific tasks of the calendar. The first task we're going to talk about is monitoring your cash. And monitoring your cash is something that you should be doing on a weekly or bi-weekly basis. You can see the calendar tool part 1. It's listed under weekly and bi-weekly, and this is a managerial task. So it's something you're going to want to do yourself, and you want to monitor your cash balances, and you can see that it's a pretty task with the number 1. So we're going to look at the more detailed task part under tool to see what we actually need to do. So you can see and all the different things that go on with monitoring your cash balance. I see this on the PowerPoint, so I'm going to go ahead and go into a little more detail in the coming slides. So monitoring your cash is to maintain a positive cash balance. If you're taking a regular look at your cash balance, you can avoid checks and late fees. And doing this on a regular basis allows you to stay on top of your cash before it becomes a problem. You know, if you have a problem one week, it can easily spiral out of control in subsequent weeks if you're not paying attention. And this can be the beginning of a cash crisis. Monitor your cash balance. Well, you need your current bank balance, and you need estimates of the cash that's going to be coming into your business and cash going out. And this is the cash coming in and out of your business in the coming week or a few weeks. So where did data come from? So bank balance. What do you actually have in your bank account? You can obviously look online to see your balance, but it's not always trustworthy what's actually stated in your online bank account. As an example, you may have written a check to your credit card company last week. It may have gotten there, they may not have deposited it. So you have a check that's out in the world for $1,000, but it's not recorded in your bank because the transaction hasn't actually gone through. Or you may have paid your employees and they've been sitting the check for a week and they don't deposit it at that moment that you're checking your bank balance. It's better if you can look at your QuickBooks register or at your actual bank register that you're tracking to see what bank balance is. More trustworthy than looking online. And it's back to the day tasks of making sure that you're entering all of your transactions into QuickBooks or into your checkbook register. What you need to know is what bills do you have due? So when are you planning to send, or what cash goes out the door in the next week to pay a bill, whether it's your telephone bill or a bill to your seed supplier? A special place where you keep all of your bills. If you're using QuickBooks, you can run the accounts payable report to see what's coming up, or you can also look at your cash flow budget to see what you have coming up. So not all of your bills will be in your accounts payable. As an example, at the end of the month, you have your rent due or mortgage payment due, and that don't necessarily have a paper trail or a bill coming in that says, oh, my mortgage is due. So you need to be aware of what bills you have coming up, in addition to physical pay bills that are coming in or what's listed in your accounts payable in QuickBooks. Anticipate what cash is going to be coming into your business. So maybe going to a farmer's market in the coming week, and you'll have $1,200 in sales or $2,500 in sales. You may have sold produce to a local restaurant and anticipate that the payment will be coming in the mail that week. Perhaps you're expecting some SA prepayment checks to come in. So you have your current bank balance, the bill and cash payments that you have coming up in the coming week, and a list of the cash that you project to be coming in business. so simple of how all of the numbers come together. This is a pretty situation. So let's say you're starting with a beginning bank balance of $4,100 and you're payable, you have the bills on your desk, you see that you have $1,300 in bills due. You may also know that you've got a loan payment coming up for the tractor that you just purchased for $750. And the farmer's market coming up, you're probably going to get, on average, $2,500. So if you take your beginning balance of $100 and then subtract the balance of $1,300 and $750 and add $250, you'll be left with $4,550 in your bank account. So you can feel paying all the bills that you have this week, knowing that you're going to have enough money in the bank to cover all of this. But some work quite as planned. It could be that you're starting the week with $4,100 in the bank, and you see accounts payable that you have $1,300 bills coming up, but you also have payroll and mortgage and a credit card bill that all align on the same week and they're due. And you only have $20 coming into the business. That's not going to be enough to cover all the cash payments that you have. So in this situation, you're going to need to make some choices. And how are you going to manage this shortfall? You can't just write checks, $5,750 and the $1,300, because if you do, you're going to bounce some of those checks, and then you're going to start incurring fees and fines. You need to make a choice. Can you defer any of the payments that you have to a week when you expect more cash to come in? That you can do to up more sales and more cash to come in? Can you sell more CSRs? Can you go to some of your wholesale accounts? What can you do to put the cash flow into your business so that you can cover these bills? As a side note, you can look back to your projections to see coming up so that you figure out how to this cash flow discrepancy before it becomes a big problem. Monitoring your cash on a weekly basis, it's going to help you avoid this kind of situation. Questions about how to monitor cash flow?
It looks some audio problems from some people. We've had a couple of issues with that, so I think some people may be having trouble with. I just want to let you all know, it seems like it's working for some people and not others. So if you're not hearing audio, please make sure to double check your own microphone because we are broadcasting. We're also recording this, so if you are having trouble or if you've missed the few minutes, we're going to post this all on our website afterwards. Some people they had trouble until they tried calling via the computer rather than with their phone or other issues. We had a question also about a time the webinar is scheduled to end at 12:45.
So we're monitoring cash then.
Yes. And if you have questions in the future, feel free to. We're going to have another break for questions and then a longer Q&A period at the end.
All right. So the last that we're going to talk about is comparing actuals to projections, and this is a monthly task. And I alluded to it a bit in the earlier task of monitoring your cash. So you can I think you should do it on a monthly basis, though we said you could do it quarterly. You can do it quarterly during the off season. In the growing season, you really want to do it on a more regular basis. And it may seem counterintuitive to monitor more closely during your busy season, but that's exactly why you want to monitor closely, is that when you're really busy, it's easy to lose sight of what's going on, and you want to make sure that you're staying on track. You see that there are two little numbers, number 5 and number 6, and those 5 and 6 refer to the more detailed task. And there's two different things: reviewing your sales and comparing them to projections, and also reviewing your expenses. So let's look at what's involved. The monthly and quarterly subsection of the detailed list, all things that you need to do, the task, what is the goal, the tools that are needed, and the process. So sections here, if you're working within QuickBooks, it's going to be calling it your budget, and there is a function in QuickBooks that allows you to enter your budget in so that you can run a report comparing your actuals to your budget. I'm going to call them projections, but it's much the same thing. And basically, the reason why you want to do this is to keep track of your profits. As the business goes along, you have target for revenue and target for expenses, and you want to make sure that you're not overspending and you're achieving your sales targets. Presumably, when you did your projections at the beginning of the year, you set up a plan for yourself that's going to ensure that you stay cash positive and that you're running a profitable business. So a plan that you think can work, and you want to make sure that it's actually working. So you want to look back on a monthly basis to make sure that you're hitting all the targets. So to compare your actuals to projections, you're going to need cash flow projections, and you're also going to need a list of all your sales for the comparable period for whatever month it is, whether it's May or June, and a complete list of all the expenses that you had. It's helpful to export these reports from QuickBooks into Excel so that you can start to compare the numbers. If you're doing everything in Excel, you can just have, your Excel report with your total of expenses and sales. Just earlier, it's helpful to have cash flow projections using the template on the Carrot Project website. To get sales numbers, it's easier to run a report in QuickBooks. You can run a profit and loss report, and you can run it for a specific time period. Or if you're using Excel, you'll want to total up all the sales you had in the particular month in your Excel spreadsheet. Similarly, for the expenses, you can look at the profit and loss report in QuickBooks or at your Excel sheet. And run the reports in Excel, it's helpful to look at your expenses as a percentage of sales. So if your sales are $10,000 and your expenses are $2,000, that's 20%. So 20% spent on your expenses. And looking at these numbers as percentages and not just as raw numbers will help you have some context in evaluating these numbers. Sample of February 2016 comparing actuals to projections. So the farmer ran their report and they saw that they had $92,000 in sales for February and their budget was $80,000, $87,000 and change. And their over budget, $11,000, which is great. They had 14% higher than projected, and that formula is the percentage off of the is the difference over the budget number. So the difference is the $11,000 and the budget number is the $80,000. And that's how the percentage off of the budget. So that the farmer exceeded their budget for sales. But as they start to look at their expenses, they may want to think about things not just as raw numbers, but as percentages. So for example, this farmer has cost of goods sold. It's the cost of the products that they actually sold, and budget was 68%. So because they exceed their budget in sales, their cost of goods sold projection is going to be off as well. If you look at raw numbers, it looks like they went over budget in terms of what they spent on cost of goods sold, but percentage, they actually did quite well. So they projected that they would spend 68% of their revenue on cost of goods, but in fact they spent 62%. So sometimes it's helpful to look at the percentage, and sometimes it's helpful to look at the raw number. In this case, looking at the expense as a percentage of revenue is a more telling story. Our expenses, the actuals to projections. So this farm listed all their budgeted expenses for seeds and small tools and office supplies, auto repairs, and we can see the net difference between the two numbers, and we can see the difference as a percentage. So the $35.32 over $808 is a 4.4% difference. So the highlighted cells in green say it's projected, so it's good. If they projected spending $800 on seeds and they only spent $772, that's great. This farmer went a little over budget with their auto repairs, so probably an unexpected repair, maybe the carburetor blew, or there's something that they expect happened and they needed to repair. So obviously you need your truck to get to the market to make deliveries. You've got to make this repair. But knowing that you're over budget by $1,500 means that you need to make adjustments. Can you still? I just heard. Okay, great. Thank you. Over budget in some areas means that you need to make adjustments later on. So even though this farmer was under budget for many of their expenses, because so far over budget with the auto repairs, they're still over budget. So know that you've gone over budget allows you to make adjustments and not get yourself into a cash crisis later on. Any questions on how to compare projections to actuals? Okay. So the task that we're going to talk about from the financial calendar is reviewing the pricing structure. And the price structure, reviewing your pricing structure comes into two parts.
Oh, question.
Yes.
What is a good range for a percentage, what you're aiming for?
In terms of being under budget or over budget? In terms of hit budget, it's better budget in terms of your expenses and over budget to be in terms of your revenue. Depending on the size of your business, a few percentage points can really make a difference for some businesses, and depending on how tightly you're running on cash. If you have a buffer in your bank account of $20,000 or $50,000, a few percentage points aren't have a huge impact. But you're running really close to the wire, or if you've only got $1,000 of a cushion in your bank account, then 1 percentage point could make a huge difference. So it really depends on the size of your business, how close you want to be, and how much buffer you have. So pricing structure. So when pricing structure, we're going to come at it from two angles. On the one hand, you want to know your cost of production. On the other hand, you want to know what the patient is charging. So talk about the cost of production today. You can go to the Carrot Project website and read more about doing a competitive analysis to understand your competition and how it impacts how you price your products. For now, we're just going to talk about the cost of production. And cost of production is something that you'll want to do on an annual basis when you actually have a summary of all expenses and a summary of all revenue. You can't really do a cost of production on a month-by-month basis just because the growing season can be so protracted. You get your radishes in April and you don't start harvesting until May, And so you have your expenses up front in April and your revenue in May, and you can't really compare until you've completed the growth season. It's helpful just to look at things at the end so you can make adjustments for the following year. And you can task, and it has a number 10 that refers to the more detailed calendar. Since number 10, reviewing pricing structure, we have the cost of production and also the competitive analysis. But for now, we're just going to talk about the cost of production. So analyzing the cost of production is a way to help you really understand your true costs. And number one can help you price your products more accurately. You know, if it costs you to raise one chicken, then no, you have to charge at least $20 and $25 or $30 for those chickens. So knowing how much it costs you to produce and raise what you're selling can help you price it appropriately. Also, it helps you understand which products are more profitable and where you want to focus your growth. So an example, if you're growing tomatoes and arugula, and tomatoes earn you 10 cents a pound and arugula earns you $4 a pound, you may want to think more growing more arugula and not tomatoes as you grow business. So your cost of production, you're going to need a production tracking worksheet, a labor worksheet, and a list of your direct expenses. So these numbers come from. So production records. How many tomatoes did you grow? How many chickens did you raise? How many eggs did you sell? You can find out these numbers from your sales records or your invoice records. So every time you sell to a wholesale customer, if you keep a list of what sold, you'll have your production. Or you can put things into a tracking spreadsheet in Excel. You're also your labor, and track something that you want to do on a weekly basis, and you'll set in the checklist. And you'll want to track your labor time in Excel, or you can also do it in QuickBooks. And on a regular basis for the different costs, then you can have a quick summary. And you also want to track your expenses. So you can track them in Excel or QuickBooks. If you use QuickBooks, you can use classes to track specific expense categories. Or are using Excel, you can list all your tomato expenses, all your arugula expenses. You can look at vegetables as a whole, or you can look at 3 or 4 different crops. And more about labor, you really tracking your time and not just what you register in QuickBooks as your labor expense, what you paid your employees. Alarmers aren't tracking their time and certainly not tracking it as a salary, but your time is an actual cost of production. And if you're not actually paying, you're going to have to pay somebody else to do it for you. So it's important to recognize the cost of your time is a real expense on the business, and you want to track it as part of the cost of production. And the labor tracking is under the daily tasks, where you work, where you track the work that your employees did, as well as you're recording the production data. And of course, recording the revenue in accounting software. Example of how a farmer laid out their cost of production. She broke out her labor into 3 major categories of, basic chores, of managing. I'm sorry, did I say this was an example of an egg production farmer? You can see that she had her totals as $5,850 80 eggs, which she had from her tracking worksheets, and so paid her employees $15 an hour. From the tracking worksheet that she broke her labor out into 3 different categories. She had her chores, washing and packaging of the eggs, and some miscellaneous. And she actually had a tally of what she did each week, and she added it up, and this was the sum of her time. So you add up all the and you multiply it by 15, you see the actual amount of money she spent on labor, or the value of her own labor, even if she didn't pay herself. And the value of the 55.80, divided that by the number of dozens of eggs that she sold, so we came out to 95 cents per person for the chores, and went through that basic calculation for all of the other expenses and time. When we total it all up, that total cost of production was $4.35 per person. So now you can make an informed decision of what she wants to price her eggs at. She could charge $5 a dozen and make 65 cents a dozen, but 65 cents a dozen, that's going to be a lot of eggs to sell to cover overhead expenses. So she's going to want to think about maybe $5.50 or even $6 a dozen. She can also use this number to decide if she wants to purchase more equipment. So an example, the washing and packaging, she spent 336 hours, approximately $6,000. Does it make sense for her to invest in a washing machine for the? So now she knows how much time she spent and how much money she spent on the washing and packaging, and she can decide whether it makes sense to make the investment in new equipment that may save that labor. Any questions on cost of production? All of you very much for joining us today. The financial calendar is on the Carrot Project website, and there are 2 components. There's going to be the checklist and so the detailed list. And feel free to email us with questions.
Thanks, Julia. So we've got a few minutes left for a Q&A period if anyone wants to ask questions. We will all be posting the audio of this on the website in the next few days. If you have any questions, feel free to ask them now. Otherwise, you can always feel free to get in touch with us at businessassistance@thecarrotproject.org. We can answer any questions that may occur to you later as you this over more in the future. And as you leave, there will be an exit survey, which will take about 2 minutes of your time, and it helps us a lot in planning our programs services. So if you don't mind filling that out on your way, that'll be a great service to us. The slide question about whether the slides will be available as part of the recording, they will. It'll be a video recording in addition, so you'll be able to hear the audio and see the presentation as well. About include marketing and distribution costs. Don't also need to be taken into account when you're pricing the eggs?
Oh, absolutely. Absolutely. And that's part of the overhead expense. And that starts to get into a little more detailed analysis than we're going over today. But think about the cost of production, and it's $4.35 just to produce the eggs. And the profit margin between what you charge and what it costs to produce needs to cover your marketing expense, your distribution expense, overhead expense such as rent, your phone bill and your website and your truck and all those things. So you need to factor in what expense and cash outlays do you need to cover with the profit from the eggs.
Any other questions? We're going to sign off at the moment. Again, if you have any other questions in the future, feel free to pass them along, and we'll post the audio and video again on our website in the next few days. Thanks so much.